welcome to Simply Tax. Now, normally this time of year, tax accountants everywhere would be emerging from tax season. But obviously, with the onset of the COVID-19 pandemic, it was clearly tax season not normal this year. And as you've discussed on the last few episodes of the podcast, and you'll hear from our guest on the podcast today, tax season, I guess, really isn't over. At least in the federal sense, after 3 rounds of deadline relief provided by the IRS that pretty much made July 15th the new April 15th for federal forms and payments due between April 1st and July 15th, 2020. I opened up and shared with you when we started this podcast journey together that I don't know the answers to all things tax, but I do generally know where to get them. So to help us navigate a tax world that's seen a whirlwind of change, as well as to cut through the static of all the developments and boil them down to the bottom line, I called up 2 of the tax minds I respect and have learned from the most at BKD. Up first, you'll hear the familiar voice of returning guest Jesse Palmer, BKD's Director of Tax Quality Control, on the changes and developments that we've seen this tax season, particularly from the CARES Act, now that we're about 1 month in since the enactment. Then, and I'm pretty excited about sharing this interview as you'll find out, we'll hear from Gene Morgenthaler, what it was like to live and work through the tax season, and how it stacks up with those that have come before it. Let's get started with Jesse.
It's hard to believe it's only been a month, right? It seems like we've been dealing with this for 4 months or 4 years, not 4 weeks. But I think the experience has been things have been coming so fast and furious in terms of new legislation. The CARES Act, Families First Act, and then the passage of additional funding for the PPP loan program and so forth. So, I think the experience has just been trying to keep on top of everything that's coming out of Washington, as well as adapting to a remote work environment with the teams, not being together physically and working from home or other locations. So, trying to work through that, as well as digest all the new law and get the information out and educate people and work with clients to identify opportunities. It's certainly been a whirlwind, and then obviously throw in tax season. Originally being due at April 15, although, as you know, we've received some extensions. So I guess congratulations, we get 3 more months of tax season. But obviously dealing with all the compliance that we normally would be this time of year as well, as it's just been very overwhelming. But at least now things are sort of starting to slow down a little bit in terms of just new legislation, and really is kind of shifting over now into what are the opportunities and things we need to be thinking about and talking to clients about. I think the other experience, and as I'm sure you're well aware of too, working with your client base and others in your market, is just all the misinformation. I think that's flying around out there too, which we certainly dealt with that with tax reform as well. Everybody has different interpretations of the statutes, and obviously with it being new law and over 800 pages, you'd think there'd be some pretty good details on how some of these things work. But when you really dig into it, things like the employee retention credit and the PPP, the Paycheck Protection Program, there's really a lot of ambiguity and confusion. And I'm sure you've had to say this more than you care for, but lots of times we just have to explain to clients that we may need more guidance, and we need to wait for Treasury, IRS to provide guidance, or the SBA to provide guidance. So, there's been a lot of frustrations, I think, around that aspect too. Just the fact that we aren't able to give clear answers on every single thing at this point, but certainly banks being the lenders here for these SBA PPP loans, and I think they're having their own struggles too, just getting clear guidance from the SBA in terms of who qualifies and how do you calculate the maximum loan. And of course, one bank tells one client something, and another bank tells a client a different thing. And it's just trying to reconcile that and make sure that people understand, here's what the rules are, and a lot of education, not only with clients, but maybe with banks or other sources.
So I guess with that in mind, and the fact that we are still waiting on any guidance, which is to be expected. I mean, we're just within this getting rolled out and understanding what they mean. But are there areas that you think are maybe commonly getting overlooked or that you think people should be really kind of drilling in on?
I think there's been definitely a lot of good education. I know we've done a lot of thoughtware and getting the information out and educating, both internally as well as externally on all the different provisions. But obviously, with just everything going on, and first and foremost, you're worried about your health and safety and the health and safety of your employees, and just all the other things that you're dealing with right now, and it's so hard to keep track of everything. But the PPP, the loan program, has been front and center with a lot of small businesses and mid-sized businesses, and that's definitely been an area of focus. But certainly, from a tax perspective, thinking about, okay, what are some other ways to monetize net operating losses or get more immediate cash relief from a tax perspective? And so certainly, looking at net operating losses, under the CARES Act, they now allow, which was under the tax reform was taken away, the whole ability to carry back NOLs. So that's been temporarily suspended for 18, 19, and 20 to carry back NOLs for 5 years. So, looking at not only 19, and if you're still in the process of preparing 19, but what happened in 18, because if you had net operating loss in 18 that you were carrying forward, maybe this is an opportunity to carry it back and get more immediate relief, more immediate cash from monetizing that NOL, particularly with sorry, window washers are having a good time.
You're good.
Holy cow.
We can wait
I
for
think they're
I
trying to
I
break
was
in.
I was gonna say, like, the fact that I could hear that's pretty surprising because, like, usually, like, get a little squeegee noise or something.
Well,
So that's funny.
I'm whatever I was saying. Oh yeah, net operating losses, and being able to carry those back immediately, and particularly for a corporation. And with the tax reform, they changed the rates for corporations from up to a 35% rate to a flat 21%. So if you have net operating losses that were generated in 18 or 19, that or 20, that can be carried back to a 34 or 35% tax rate year versus carrying it forward in 21% rate years. That's certainly an opportunity to get more value as well as more immediate cash from those net operating losses. So definitely looking at those opportunities. And I think the other, probably pretty narrow, but there's definitely corporations that are fiscal years that their 2017 tax year that ended in 2018 but began before 1/1/18. There was that technical issue, drafting error in the statute and tax reform that basically did not allow those corporations to carry it back under the old rules. So that's been fixed as well under the CARES Act. So even those where you might have a 17 tax year that ended in 18 before, because of the technical glitch, you couldn't carry it back. Now you do have the opportunity to carry it back, for the 2 year period. So, I think it's looking for those opportunities as well as just general amendment opportunities for 18, or if you filed for 19 already, filing amendment for 19. One of the big ones was certainly the qualified improvement property fix, what kind of been termed the retail glitch that allows you to now be able to take bonus on qualified improvement property versus before, after tax reform, only being able to depreciate it over 39 years. So there's opportunities to amend 18 or push it through on 19 through an accounting method change to generate or increase NOLs for those years that you can go back and monetize. Or even if you still have income in 18, if maybe that reduces your 18 income by that additional depreciation, that you can then get a refund for that amended return. Certainly from an individual standpoint, the excess business loss limitation that was put in place under tax reform, that's now been essentially postponed until I think 2021. There might be some of those opportunities where you had additional losses that you couldn't take in 18 or 19 if you filed already, that you can amend and go back to remove that limitation to potentially get a refund opportunity. So I think those are definitely some areas in terms of not only the PPP loan opportunities, but thinking about from a tax perspective, looking at your 18 and 19 tax years, and how can I create some monetization opportunities with these changes in provisions. So I think that, as well as, for payroll tax, some of these provisions under the CARES Act really look to help get money in businesses' hands via the payroll tax regime versus an income tax. So things like the employee retention credit, looking at, am I able to qualify for that credit, which is up to $5,000 per employee based on 50% of wages paid. So there might be some opportunities there, not only to take a credit on your quarterly payroll tax return, but kind of get an advance on that essentially by being able to withhold and not remit to the IRS certain other withholdings. And if you don't have enough, there is a form that you can file to basically get an advance of that credit. So those are some opportunities. And probably the other big one that been talked about a lot is the payroll tax deferral that allows businesses to defer, as well as certain self-employeds, to defer payroll tax on, essentially the employer portion of Social Security tax from mid-March through the end of this year, 12/31/20, where you can essentially defer and not have to pay any of that, and you can defer it up to 50% due 12/31/21, and the remainder in 12/31/22. So I think that's certainly something that you can take immediate advantage of. I guess the one thing I would just caveat about this, because it's a little different, some of these other incentives, is that still has to be paid at some point. So while you can keep it now, it does have to be paid at some time. It's more like an interest-free loan from the government. So, certainly cash is king right now, and people need the cash, businesses need the cash. But if they're using that cash that they're retaining from the payroll tax deferral, it's just very important, I think, to keep in mind that that's got to be paid back at some time. So we need to make sure you're planning for that down the road. So 12/31/21 doesn't come and you realize you don't have the funds to pay half that amount that's deferred.
So many pieces in there, and kind of fit them together. And but the qualified improvement property, any insights you'd have? Because I know obviously we just got that guidance, and it gives some flexibility, which is kind of nice, right? Because you can amend, or you can do the method change. You offered a few in there, but I don't know. Maybe speaking to that a little bit more, because I feel like that's been one that we've been watching for, and now we have, is of the fix from tax reform. Any advice on actually approaching that?
Yeah, it's unfortunate that it took a pandemic to finally get Congress to fix that technical correction, because I mean, it was certainly something that had bipartisan support to fix that issue and so forth. But getting that attached to something without requiring a lot of back and forth and concessions from the parties to get it passed. So, I guess fortunately we finally got it passed. Unfortunately, it was passed already after at least one filing round where people have had to apply the statute as written in terms of depreciating over 39 years and not able to do it over 15 and take 100% bonus. So it unfortunately does put some taxpayers in a position of amending 2018 to take advantage of it, and particularly with flow through into these S corporations and partnerships with hundreds of partners or shareholders. Making that fix via an amended return is just not that easy, because you not only have the entity return to amend, then you got to flow that through to all the individual returns, and each one has to amend. So it can be very time consuming and costly to do all that. So as you mentioned, there has been some relief, as we expected, come out from the IRS to say, okay, instead of amending 18, you can essentially file what's called an accounting method change and essentially catch up that missed depreciation on your 2019 return. So I think that's a great opportunity, particularly for these large flow throughs where it's just going to be an administrative nightmare to amend versus taking it on 19 or the 2020 tax year. So I think that's definitely a positive that we got from the IRS in terms of having some options there to amend or file accounting method change.
A lot to think about, a lot of pieces, like we were saying, to kind of fit together. And but then obviously kind of assessing that before taking action on that probably is the thing to absolutely do there, I guess, from my perspective. But what would you say, has maybe surprised you about all of this, kind of observations of either the provisions that were in there, or even just the reaction and the response to it in the last month?
I'd say one of the biggest surprises is how many income tax professionals all of a sudden had to become very familiar with payroll tax rules and small business association loan rules, and really doing a lot of things that you normally wouldn't expect to be doing anytime, let alone in March and April of tax season, in terms of reading SBA guidance and working with clients on determining what their loan might be through the PPP loan program, or are they even eligible? Because there's certainly restrictions on who can qualify for the PPP, and like many things, it was pretty unclear through the statute as far as not for profits or groups that consolidate. How do you look at the affiliation rules in terms of if you have related businesses, and how does that affect your 500 employee test? And looking at the employee based or revenue based size standards, and then the small business concern standards. So just a lot of different rules and exceptions that you really have to kind of dig through to figure out, am I even eligible for this loan? And then certainly, how is the forgiveness going to work? Because reading the statute, it's really unclear exactly how all of this is going to work in terms of the forgiveness period, and how much of the loan can actually be forgiven versus how much will actually still retain the character of a loan and have to be repaid at some point. I think 2 years, 1% interest is certainly good for a loan, but still just trying to figure that out on the front end without a lot of guidance has been challenging. I think the other area we've definitely been feeling a lot of questions on is the employee retention credit being a payroll incentive, to allow not only for profits but not for profits to qualify for that. Just trying to understand how that's going to work from a payroll tax standpoint. Some of the wording in there's kind of two different tranches of how you calculate the credit based on the employer size. So if you're over 100 employees, there's different stipulations on what are qualified wages versus a much more generous, I think, criteria for employers with 100 or less employees. And, kind of the other areas is the criteria of what's an eligible employer. You kind of had two prongs there. You could either had a full or partial shutdown due to a governmental order, or you had to have a gross receipts test if your gross receipts fell below a certain level compared to that same period last year. And I think most employers are probably going to be able to use the governmental order test. Obviously, most states or local authorities have in place some sort of stay-at-home order or restrictions on businesses. So I think most are going to have some opportunities to qualify under that, but there's still some uncertainty there in terms of I'm a bank and I still have my drive-through and my ATMs open for customers, but I had to close my lobby because of COVID-19 and can't have people in. So does that qualify as a partial shutdown or not? There's one example the IRS put out on its FAQs regarding restaurants, and the whole in-room dining is not allowed under a governmental order that qualifies as a partial shutdown. So, trying to equate that to non-restaurant businesses, and can you get comfortable with a position that there is at least a partial shutdown? And the Joint Committee on Taxation did release its technical explanation of the CARES Act, and fortunately did provide a few more examples in that report that kind of put a little more light into that rule, as well as affected employees if you have over 100, in terms of if I'm still paying an hourly employee for 20 hours of work for the week, but they only have to work 15 hours. It did give some light there in terms of that 5 hours you're still paying them can qualify. But there's still questions out there that we need more guidance on from Treasury in terms of who else might qualify if you're over 100. Because one question I've received a few times is productivity. So if I have a salaried employee that is working from home, maybe they're only, in my opinion, 80% as productive as what they normally would be in the office. So is there a position or thought that you can take a credit on that 20% of inefficiency that you're still paying them for? I think that's in my opinion, a fairly difficult position, but certainly one hopefully we'll get some more guidance on from the IRS and Treasury.
There's all these wrinkles of when you actually get in to start applying this stuff in practice that come up and that just aren't. I mean, it's impossible to contemplate them all, especially when you look at just the windup of time that for this to become to make its way through the process in Washington and become law. So yeah, there's definitely to be expected a number of those sorts of things, I guess. But kind of now where we are, currently, looking forward, what advice, what suggestions do you have for approaching that? The tax season, I guess you could say, really isn't over. I mean, it goes out to July 15th, right? And then the extension season beyond that. So, any tips there on how to approach this stuff?
Yeah, I think certainly going forward, there's still a lot of uncertainty as far as how things are going to turn in terms of the next couple months, in terms of reopening the economy and how that's going to work, and obviously the fear of hotspots popping up and spikes again, and what's that going to do. So certainly there's just all that uncertainty. But I guess from a tax standpoint, the one thing I really think businesses and individuals need to be thinking about is cash and cash flow and planning for that. So looking at cash flow analysis and doing a lot of different what if scenarios and modeling to figure out what are my cash flow needs, based on this certain scenario and this different scenario. I'm kind of doing different scenario plannings to determine what my risks are in terms of being able to fund my business and keep my business in operations. From a tax standpoint, certainly, again, as I mentioned, the net operating loss and planning for that, particularly for 2020 and 19, to the extent there's still opportunities if you haven't filed your 19 return yet, to look at planning opportunities to create those NOLs or reduce your tax liability. So kind of the old blocking and tackling, the whole deferral of revenue and acceleration of deductions, and how can I best take advantage of the opportunities out there. So things like cost segregation studies, if you've past few years or here recently purchased a new building or constructing a new building, and looking at cost segregation as an opportunity to identify some shorter lived property within the building that you can depreciate, over a shorter life or take a 100% bonus on. So looking for those opportunities. Accounting method changes obviously is always a good one to think about in terms of, is there different accounting methods I could use to accelerate deductions or defer income. With tax reform, that was certainly a big area a lot of businesses looked at in terms of the expansion of the cash method and relief from the unicap rules for certain small businesses. But to the extent maybe you haven't looked at that or passed on that for 18, revisiting those if you qualify for cash method or so forth. Prepaid expenses, to the extent you have some opportunity to accelerate deductions for some prepaid expenses. So just various accounting method and change opportunities that are out there for businesses with international activities, foreign subsidiaries or foreign owned, where there's cross-border transactions happening and you have transfer pricing issues. Certainly revisiting those transfer pricing agreements, and in light of everything that's happened, is there potential to put together more favorable agreements from a transfer pricing perspective, as well as just kind of all the other good stuff that came out of tax reform with the international, with beat and guilty and 965 provisions and so forth. So just looking at all those areas for opportunities. I'd say also from an individual perspective, bad as it sounds, or as I think I heard somebody say, kind of the ick factor, if you can get over that. But looking at, are there some opportunities in light of the kind of depressed market to look at some other gifting and estate planning opportunities? And certainly, Damien, I know this is your area of expertise, so you might be able to share, some of the more specifics around the wealth planning or estate and gift planning opportunities.
I agree with you, especially on the that maybe that ick factor too of it's not the first thing you that comes to mind. Obviously, first and foremost, taking care of everything that's at hand and family and all of that. But it absolutely is. I mean, it's sort of almost a trifecta of a perfect estate planning environment, because valuations are depressed, coming down. And I'm no valuation expert, but actually we have some content out on that to kind of dig into the weeds there a little bit more. But obviously, even just the stock market's down, and you couple that with the Section 7520 rate, is at really a historic all time low, and that rate is used for a lot of the sophisticated planning that can be done. So basically, that's a very favorable thing. And then the third prong is the fact that, with tax reform, we had the doubling of the exemption. We also, in the meantime, had received some guidance that's been finalized that it's not going to get clawed back if you utilize this extra exemption, lifetime exemption amount between now and when it's set to expire, a lot of people have increased exemption available. So you kind of put those things together, and it does make for that environment where if you've been having conversations around complex estate planning type structures or some of the sophisticated things that you can do, now really is a very ideal time to really look at those. And it's very individual, depends on the family, depends on the assets, depends on whether or not you're even subject to the estate tax and some of the state tax considerations. So there's a lot involved in it, but when you look at now in that environment, now really is a good time to have those conversations and just really kind of looking at the big picture of kind of what it means for wealth transfer for a family between generations. So just another thing to layer on in there, right?
Absolutely, and probably the other thing, Damien, to think about too, from an urgency standpoint, is you think about just the cost of all this new stimulus packages. 2 trillion for the CARES Act. With a T, trillion, just this additional funding with the PPP and some other healthcare funding, 500 billion or almost 500 billion. So, talking about $2.5 trillion of new debt that's going to have to be paid for at some point. Obviously, the estate tax area is always a hot area that Congress looks at in terms of revenue raising opportunities and so forth. So, probably even more so, a reason to be really thinking about that, I imagine, is just the fact that, okay, somebody's got to pay for this down the road at some point, either through rate increases or new taxes or so forth. So, how can we take advantage now? Speaking of revenue raising, I probably need to also, spend a little bit of time talking about state and local tax, because this has certainly been a real strain on states as well from an economic standpoint. You think about one of their main revenue raisers is the sales tax, and in most states, that's kind of their big revenue generator. And when everybody's staying at home and not going out and buying things, not a lot of people are paying sales tax on things, so they're going to have obviously some challenges as well. And certainly when states have those type of constraints, what's their next step? It's going to be enforcement. How can we go out and find more revenue? So things like nexus and looking for businesses that they can try to assert have nexus and should be filing and paying tax in their state. Sales and use, certainly, with the Wayfair decision a year or so ago, and just with all the remote sellers, probably more so now with a lot of businesses going online selling. Our state's really going to be taking a even closer look at remote sellers and how can we generate more revenue from all the online shopping that's going on, and potential customers or businesses not paying sales or use tax on those purchases. So I think certainly don't want to overlook your state and local tax exposure, as well as opportunities, with credits and incentives, and making sure, are you taking advantage of the various programs out there that states or local authorities, governments provide for adding employees or investing in that locality. So definitely want to be thinking about those opportunities and exposures as well. Certainly with everybody, a lot of people going to remote work environments and a lot more transactions and meetings and other business occurring more virtually online, cyber security really needs to be top of mind for businesses in terms of, are their networks secure, and really looking at their exposures there and considering, do I need to look at additional security or do penetration testing or other things to make sure that I'm not exposing my business to cyber issues and ransomware and other things that can occur out there in the cyber world.
And just so many things. Again, I feel like I'm repeating myself just to think about, and aspects and considerations how it fits into the greater plan. It probably just really illustrates the need to take it all in and take a holistic view of how it affects all things tax. Like you said, even the state and local, and looking out into the future in terms of what future rates could be. So many pieces to put together, and maybe that end, kind of, if you were going to kind of to put the pieces together, kind of closing thoughts, closing perspective, what would you kind of leave everybody with on this topic and what's been going on here?
Keeping on top of all the new rules and regulations and all the opportunities that provide, making sure that you're able to take advantage of these provisions and monetizing things from a tax perspective or other opportunities out there for funding either through the SBA programs or other government programs put in place. So, just making sure that you're keeping on top of that, working with your advisor to be familiar with these different programs, and working with the tax advisors that can help you with these different tax planning ideas to monetize things such as your net operating losses, and looking at credits that are out there available for you to be able to help retain your employees, and be able to weather this certainly unprecedented time that we're in terms of the economy and making our way through it. But also just being very mindful that, like I said, this is all going to have to be paid for at some point, and certainly there's going to be a lot more potential enforcement down the road, from the IRS or the SBA in terms of these PPP loans and the forgiveness feature and so forth. So making sure that you're clearly documenting your positions, and tracking, with the PPP, make sure that you're tracking your expenditures that are eligible for forgiveness, and having a good audit trail in case you're ever, if the government ever comes knocking on your door, you're going to be able to get through that fairly painlessly. So, just being aware of that for businesses that are in acquisition mode, or looking at different M&A opportunities. Certainly, in this environment, there's potential opportunities with valuations to be looking at those transactions. So just keeping your eyes open to those opportunities that this environment brings up, and then certainly cash flow. Making sure that you're on top of that from a cash flow planning perspective. I think a lot of businesses will definitely be focusing back more on the efficiency and cost cutting measures, and how can we be more efficient. So, looking at things such as automation, robotics, and the other new technologies out there, how can we really take advantage of those to become much more efficient in our business, in terms of using robotic process automation to automate things, and kind of looking at those different types of efficiency measures to make your business even more set up for success long term.
Yeah, thank you for that perspective because I feel like you got to digest it all and take it all in. So, anything else you'd add before we wrap up?
I guess from your perspective, Damien, and the things you're hearing, what advice are you giving businesses in terms of planning for the next few months and for the rest of this year?
It really depends on the topic and kind of the situation, and that's where it's I think been helpful in a lot of things that even the national group's been putting out been very helpful of walking through the decision process of understanding what it means for someone's business, for their personal situation, because there really isn't a one size fits all. And you really do kind of have to weigh, especially when you've got things that are mutually exclusive about some of the provisions. But I think first and foremost, what I've been really trying to do is just help everybody really break it down because there's just again so much coming at us right now, and particularly for a business owner, and perhaps tax isn't the first thing on their mind right now for necessarily. I mean, obviously with some of these things that can drive liquidity and help with the cash flow, there's certainly a lot of interest, and so trying to help to break through some of those rumors flowing around, the misinformation floating around. And also as we've been getting some of that guidance and those definitions and learning more, trying to help to layer that on because I think it's been a little bit of a moving target, and that's been a challenge for the businesses and business owners, and those that I work with. So I think it's a number of those things, but then also helping to identify, like you said, it can unpack those things that maybe go back to 18 and 19 if returns have already been filed, and looking at how to best take advantage of those or helping to identify those opportunities for them. That's definitely something I've been doing, especially here lately, because there's a little bit of a window on some of the quick claim refunds that can be done. So I want to make sure we get those kind of moving along with everything else. So yeah, it's really just sort of meeting people where they are and addressing their questions. And I won't lie to say that a lot of the misinformation kind of puts you back on your heels sometimes, where you're feeling like you're having to defend yourself, particularly in areas where, like on the PPP, with the areas where we don't have guidance, and perhaps somebody's saying something, and just really trying to urge people to say let's see what things actually say, and instead of speculating what we think it might say, because I think it should just be it could be right, and or they could be right, and I don't want to doubt that for a second. But I guess the challenge would be is if they're not, and then it could really have some very detrimental impact, right? And so we just want to think about that and kind of slow down before we take an action, maybe pause before jumping in is sort of the approach that I've been trying to urge to the extent that that's possible to do so. Definitely challenging though in many ways.
Totally agree with your thought about being on your heels sometimes because somebody sees something on Facebook or Twitter and takes it as oh, this must be the rule and this is what we need to do, and you got to really slow people down, and sometimes slowing down is really hard to do, particularly with the PPP and the fact that 14 days they had burned through $349 billion of funding. And so certainly getting the applications in as quickly as possible and doing that on the fly with very little guidance, and certainly a lot of opinions and so forth flying around, that it makes it tough. So at least maybe the bright side with this additional 300 so billion of additional funding, that'll help. But I kind of feel like we may be going through another fire drill here over the next 2 weeks as businesses line up again with the banks to get their applications in.
Yeah, not to mention the fact that now that we did get that guidance on the self-employed individuals, right? And some of them probably missed out potentially. If you're waiting for things, so there's an opportunity there potentially. If by the time that we're here on what Friday the 24th, and by the time we air the interview, that it's not already all the appropriations have been fully utilized again, because it is very fast moving. Yeah, so that's the challenge, right? Is slowing down to the extent possible, but then not to the extent of missing things, which is that is such a delicate balance to strike with all this. But the biggest takeaway I've had from the last month is just living through that, is trying to carefully balance those two things, is the making sure we're taking action when we need to, but not rushing to action to maybe slow down a bit there and be strategic.
As you know, there's been a lot of media and political commentary already in terms of who's taking these loans, and you're seeing some of these public companies that did take loans now returning the money, and the SBA coming out with another FAQ insinuating that most public companies shouldn't have a need for the money, and they should have other sources of funding, and kind of giving them a 2 week time frame here to return the money with no questions asked, I guess. So fortunately, I think that's also creating a lot of consternation and fear from some businesses in terms of, okay, well, what does this mean? That you have the whole self certification that this loan is necessary due to the economic uncertainty, and how do you interpret that, and how do you get comfortable with that? So I think there's certainly some things need to be advising clients and businesses to consult with their legal counsel and make sure that they're able to answer in good faith that self-certification question, because as you've seen already, it's very likely, after the dust settles and we kind of get on the other side of this, there will certainly be a lot of governmental scrutiny and potential examinations from the SBA or other government agencies in terms of who took these loans and so forth, and not to mention just the publicity because of the fact under the Freedom of Information Act, a lot of this loan information can be requested by media outlets and made public. So I'm sure we'll certainly be seeing our fair share of investigative reports and so forth from the media in terms of who's taken these loans. So just a lot of other things to be thinking about, all the more reason to take a breath and step back and obviously think about your decisions before jumping in and doing something that you may regret down the road.
Thanks, Jesse. I guess they don't call you the director of tax quality control for nothing. Quality tax insights like that. All right, let's get back to some more quality perspectives on the tax season, along with some insights on moving forward with one of the most tax insightful guys I know.
My name is Gene Morgenthaler, and I'm with the St. Louis Decatur office of BKD. My role is a tax partner in the primarily middle market or commercial practice. In addition to working with businesses, I also work with the owners of those businesses, and I have done so in my 39 years of public accounting. In addition, my role with BKD has been the tax director of the St. Louis Decatur office, as well as the North Region tax director. And I've also sat on the tax committee for the firm. I've been involved in a lot of different aspects of the tax practice for BKD, both on a local and a national level.
And you're always one I enjoy hearing from for that reason. Your perspective, the experiences that you have, the hats that you wear and have worn, really gives a lot of insight into things. And that was really what prompted me to reach out here because maybe we'll just start with how the tax season went because I feel like that's always the question that we have this time of year coming out of tax season. But clearly, not tax season is normal, but maybe that ends. So how was it? How did it go for you this year?
The best way to describe it is was a very unique tax season. So, kind of going back and looking over the last several months, I would say going into tax season appeared to be somewhat of a normal year. We did our normal year-end tax planning with our clients. We also, during the December timeframe, we put a lot of time and effort into putting our tax season and staffing schedule together. This year, we did have a challenge in that we had some significant technology changes, as well as changes to our 1040 process and how we were going to prepare and review individual and trust returns. So on January 1st, we kicked off the implementation of this new technology and process changes. And, naturally, at anytime you go through that process or start that planning process, I should say, everyone gets a little bit concerned about the learning curve and whether the changes will work. In times of change, as you know, Damien, nobody is bashful about giving you their opinion in the department. So I would say, it started out with a known challenge, but we had a good plan in place. The other thing I think was a positive for our local office was that we had a good, what we call the middle group. We have some good supervisors, managers, and senior managers in place, and we felt good about that. Again, had what we felt to be a very good plan in place, and we started implementing it immediately. There was nothing new. We knew we were going to have long hours to meet the March and April deadlines. And I would say, January, February, the first part of March, went according to plan. We were getting settled in with our routine and our long hours, and things were working. The defining moment came, I believe it was on Monday, March 16th, and that's when I would say our world and our department got turned upside down. And that was because, as everybody knows, the coronavirus outbreak. And at that time, our firm and our managing partner ordered us all to go home and set up and start working from home. And we were given no date about when we were going to return. So, needless to say, we all packed up that Monday and we all started officially working from home on that Tuesday. Didn't know how it was going to work, but I would say it did work. I would say within a day, our department was up and running, functioning. We were preparing returns as normal. We were able to review and process returns. And I would say that from having a backup plan, we put it in place and it worked. And, as you would probably imagine, Damien, we didn't really have time to think about anything differently. We were given a task and we reacted and we put it all in place. We made a lot of changes, adjustments on the fly, and everyone adapted well. I think it was truly a team effort, all the way from the youngest interns all the way up to the seasoned partners. We all worked hard to adapt and make the plan work. As a side note, Damien, no one had time to worry about the technology changes and the 1040 process changes. We adopted those. And again, I was happy that all worked out in addition to having our world turned upside down on March 16th.
You're right. You're comment about people aren't shy about sharing concerns during times of change. And yeah, I mean, nobody likes change. We talk about it all the time. Change is hard. It's not kind of, it's just human nature, right? It's just not kind of the way that we're wired a lot of times. Yeah, sometimes it takes something else coming along to kind of make it pale in comparison almost in terms of the potential challenges it could create. A lot of yeah, interesting things, obviously, first time things to deal with. But looking back at your career, how would you say this season has stacked up against others? I mean, obviously, the beyond the clear and obvious change that happened, like you said on March 16th, there.
Before any of this started, I knew this tax season was going to be a special one, and that was because it was going to be my last one. I was going to enter into my 39th tax season, which I cannot believe how the time has gone by. And I knew it was going to be my last one because I'm officially retiring from the firm on May 31st. Clearly, it was a little bit of a uneasy feeling because I knew I still wanted to be productive and work hard and make sure that the transition would go well. And I also wanted to, like every other year, make sure that I'm pitching in and making sure that I'm keeping the work moving forward through tax season and so forth. Although I'm looking forward to the next chapter in retirement, it's clear to me what I'm going to miss the most is my interaction with the colleagues and especially the clients. Little did I realize my well laid out plan in transition in my last tax season was going to be turned upside down again on March 16th. That has added some difficulty to my transition. We're still marching on according to plan. I'm going to retire on May 31st. I feel good about our team in place, introduced clients and so forth to the new team members, and all that seems to be going well. But as you would suspect, I'm a little bit nervous just about how quickly May 31st is coming up.
Yeah, absolutely.
One other additional point, Damien, too, is with the extension of the deadline from April 15th to July 15th, wanted to have a few more things done by April 15th, but I'm working on the plan to make sure all of that gets handled accordingly.
A lot of extra things to take in and to evaluate for you personally, without a doubt.
Well, and Damien, as you probably know, that as a tax professional and helping advise our clients and so forth, we always strive to have personal meetings and one on one meetings. And with the work from home, that's been a challenge. Clearly, we've been able to utilize the phone and conference calls and Skype messages and so forth a lot easier, but it certainly is not as good as that personal one on one meeting. But as we have adapted, our clients have adapted to the environment. It's really been, I'll call it a team effort, not only from our firm, our office, but it's also been a team effort with our clients because they're also adapting and wanting to get through their tax returns and issues and so forth.
Right. And I guess, yeah, well, navigating all of that, obviously, we've also had a lot of changes from a tax law perspective to navigate simultaneously. What's that experience been like?
I clearly would say it's the first time I've ever experienced anything like what we're going through right now with the changing environments. Within my last 39 years, I've never had to deal with tax law changes in the middle of tax season. In the past, as we've had a lot of tax law changes over the years. We would complain or we would be concerned when the changes happen late in the year leading up to tax season because we always felt it didn't give us much time to adapt. This tax season, we've actually had tax law changes hit us smack dab in the middle of our busy filing season. All right, let me back up. In the past, when we've had tax law changes, we've been able to strategize and try to help our clients understand the short term and long term impact. This situation that we're currently in, these tax law changes are all about getting cash to our clients so they can survive. So the fact is that we really had to understand these changes quickly and then apply them to each individual client situation. nobody has said this, I think everybody really knows that if we don't help our clients, they may not survive. So it's doesn't have any long-term planning. It's basically, how do I survive in the near future? How can I get cash to hold on and keep my employees on the payroll until we can get past this? The other thing that's made it a huge challenge is we don't know when it's going to end. I think everybody is optimistic that at some point it will come to an end. But right now, we're dealing with all these changes and trying to help our client on a day to day basis. So that's been like no other tax season in the last 39 years that I have ever witnessed. I would also say that I've just been amazed at how all our professionals have jumped in and started to help and try to understand these rules and so forth. Our national office has done a phenomenal job. I don't think a lot of the individuals in our national office have probably slept for the last several weeks. They've just tackled these changes and again gotten information in our hands to help us get information to our clients to help them navigate through these changes. And Damien, I'm not telling you something you don't already know. It's not over. So we're hopeful that something will happen to give us some clarity as to what the future, but right now it's a matter of survival.
It absolutely is. And like you said, just to kind of reiterate, right? It's nobody knows the answers to what this will look like, and uncertainty is always challenging for everybody. Much like that change thing, right? And maybe that's part of it. Is not only do we not like change when we have uncertainty and we don't know how to change. That's even perhaps further amplified. But I guess with that in mind, what advice would you have from your experience of tackling the months ahead, and even maybe if you're gonna look out to the fact that normally this time of year, like you said, there's some things that are on extension, and we have this fall tax season ahead of us. Any wisdom or experience that you could share that would maybe help to approach this time?
Sure, great question. If you work with me long enough, I always try to step back and boil it down into what I would refer to as kind of the bottom line. And I think in this case, as a tax professional at BKD or any tax professional, it's simple. We need to focus on our clients and we need to deliver the best services possible in a lightning speed. It's all about our clients. We need to stay close. We need to reach out to them, to our business owners and our individual clients. And more importantly, I tell our young professionals, put yourself in the shoes of our clients. And I think when you do that, it really helps you deliver the best services possible. Our clients are clearly nervous. Our clients are really in uncharted waters, so we need to be with them through this process. We may not have all the answers immediately, but it's important that we run them all down and try to help our clients navigate. The other thing, anytime there is change, whether good or bad, in this case, it's a very difficult environment, but for a tax professional, it represents opportunity, and that opportunity is to learn from the situation that we're currently in and the opportunity of helping our clients. I think everybody that comes out of this is going to learn a lot, and you just can't forget it. You have to be able to apply what we've learned now and in the future. The other thing is, with all the information that is coming out in thoughtware from a lot of different sources, including our firm, I think it's important as a tax professional that you weigh through all that information and then you try to tailor the specific provisions that are going to apply to each client situation that's unique. Everybody can read the mounds of information, but I think our clients are looking to us to decipher it and then, more importantly, apply it to their specific situation as opposed to just giving them general information. And then from a personal side, first of all, I wouldn't worry about what's going to happen over the next 5 years. I would put yourself on a short term schedule. And by that, I mean come up with your personal schedule for the rest of this year. Right now, we're behind in completing tax returns due to the extended due date. So we need to focus on several deadlines this year: July 15th, then September 15th, October, and then November for tax exempts and so forth. In addition to the normal compliance, we need to also fit in these special projects and that I just mentioned to try to help our clients. So I think as on your personal side of things, you need to step back and try to come up with your own personal game plan about how you're going to meet these deadlines, the hours you're going to work, and more importantly, try to avoid as best you can leading up to the deadline with a lot of excess hours. It's not easy, but I think now is a good time to kind of take an inventory of where you're at and try to come up with that game plan. And then lastly, for the next 9 months, you need to adapt, adjust, and be flexible. And again, don't get sidetracked with a lot of things that you don't have control over. I think it's important that you focus on your goals and how you're going to help meet the deadlines, how you're going to help the clients over the next 9 months. And that's going to take a lot of flexibility and so forth. One other thing I wanted to mention that's really different about these tax changes that we've experienced the last couple weeks is that I'm not aware that any of them are overly or highly technical or very sophisticated changes. Most of these changes are very procedural with the goal of getting cash to our clients immediately. So anybody from young staff all the way up to a seasoned partner can certainly tackle these changes and understand and try to apply to a specific client situation.
I like that. Yeah, it kind of gives an opportunity for everybody to try to help. And I guess maybe just leaning on that, the experiences that you have, and again, kind of thinking back to other tax seasons. Yeah, is there anything else that you would kind of add to the approach right now in the situation?
First and foremost, I might be stating the obvious. I think through this difficult time, you need to really focus on taking care of your own personal health as well as take care of your family. Without that, none of this is meaningful. So don't lose sight of that and make sure you keep that in the front of your mind and make sure you navigate through all of these issues that we're dealing with now. The other thing I would also like to mention is, as a young professional, you might think, oh my gosh, we've never had any kind of crisis like this. I would say that this crisis is a bigger magnitude, but when I look back over my career, we had Black Friday when the stock market had the single day largest decline in the history of the stock market. We had the crash of the savings and loan industry and all the problems that came about during that time period. We had the collapse of the junk bond market, which sent the market into a tailspin and created a lot of problems in our economy. We had the dot com bust, we had 9/11, we had the Great Recession and financial crisis of 2008. So, my point I'm trying to make is we've had a lot of, and we'll continue to have issues like this going forward. The good news is that our economy has been able to work its way out of these problems and issues. So I'm confident that we'll do the same with the current situation that we're in. But rest assured that this isn't the first time our country has gone through a lot of financial issues and problems. I'm confident again that we're going to get through this, but keep in mind it's not going to be the last one that you'll see in your career, and learn from this so that you can apply the knowledge that you learned through this crisis through things that will come up throughout your career. I think it's going to make you a better advisor to your clients and a better professional.
That's fantastic advice. And also, again, kind of taking the situation that we have into perspective and figuring out what you can do about it and take action on, thinking of the forward-looking aspects instead of just focusing on the here and now that we're in, right? And the challenges that we're facing.
And I think you would agree with this, Damien, that we've all gotten a lesson in economics over the last several months because clearly we're seeing how certain events can impact our economy, not only from the United States standpoint, but from a world standpoint. So, anyway, just always good to kind of step back and understand those because it ends up affecting all of us in some fashion.
And just kind of the greater fabric of how everything fits together, right? And appreciation for that fact. Great point. I don't know, Gene. Maybe just kind of pulling it all together. If you kind of had some closing thoughts to kind of bring the conversation full circle, what would you say? What would you leave everybody with?
Putting aside just what we're going through right now, I think I'd just quickly reflect on my career at BKD. So, I took an unusual path to get to BKD. 27 years ago, I made a significant change. I was 34 years old with a growing family. And at that time, I was working for a big four. Maybe it was big six, big eight. I don't know what the number was at that time, but you get the point. During my career up to that point, I always worked with closely held family businesses, and I worked closely with the owners of those businesses. My expertise has always been in what I define as commercial practice, which are manufacturers, construction, real estate, and also individuals and trusts as it relates to tax. And, my real passion became working with business owners. And I'm fascinated by how business owners have built their companies and how they have navigated all the issues that they had to become successful. At that time, 27 years ago, I could see a lot of changes at the firm I was working for. So it got me thinking that I'd like to look for an opportunity and focus on firms that specialize with closely held family businesses. And that's what led me to BKD. Initially, first few years were very difficult in my transition to BKD. And quite frankly, I thought I made a huge mistake. I even thought about going back to my old firm. And part of that was, I would say that, the firm was a lot smaller than it is today. But, the advice I would have for a young professional is that, I stuck with it. And as the firm grew, we added more sophisticated, larger clients. And what that did, it created a lot of opportunities for my career to grow and succeed. When I look at what was a major change in my life at that time, I would say that looking back, that I made the best decision of my life, which leads me to my last point in retirement. I've talked to a lot of people that are retired or are about to retire. And the one statement that comes clear through every conversation is everybody always misses their colleagues. And in our case, our clients when they retire. So truly, I'm going to miss that part of it, but I'm also anxious to move on to the next chapter of my life. So all I would just say is, hard work does pay off, and taking a long-term focus to your career will pay dividends, but unfortunately, you may not see it immediately. Hopefully that helps a little bit, Damien. I could go on for forever and tell you a million stories. I even threatened to write a book, but I realized how hard that would be, so I'm going to put that on the back burner. So, but I do truly appreciate my time at BKD, and more importantly, the opportunities that provided for me to grow and to become a professional. It wasn't easy, but I can look back now and say it actually was a lot of fun.
You will be missed. Obviously within your group, but even myself personally, you made a significant impact on my career and my development of just being able to learn from and hear your insights. I don't know. You're always one that when you speak up and say something, not to say that I don't listen to other people, but particularly listen when you speak because I feel like it's always an excellent point or observation that maybe isn't getting made, or again, leaning on the experiences that you have to really provide some helpful insight into the situation. So thank you, and thank you for taking the time in the situation that we're in, right? Because I'm sure, like even though you're kind of proceeding with the plan, which is challenging, I'm sure on many fronts, obviously professionally, personally, in all aspects of this of the word, right? But to take the time to do this is really helpful, and I'm looking forward to sharing it with others.
Well, great. And Damien, more importantly, thanks for asking me because I was honored that you did. And hopefully, some of our professionals will take a few words of wisdom out of this and apply it going forward. I wish you a great career. I know you'll do well at BKD, and you're probably in that situation with a growing family. And I wish you all the luck and good health for you and your family in the years to come.
Well, thank you, Gene. I really appreciate that. See why I was so excited to share the insights from Jesse and Gene? I'll invite you to learn more about these two go-to tax minds in the show notes of this episode, which are available at bkd.com/simplytax, which is where you can also get links to resources to supplement our episode today, including BKD's COVID-19 Resource Center. With everything going on right now, we would simply love to hear from you. And it'd be great if you would let us know what you thought of the episode and the podcast and any topics that you'd like to learn more about by dropping us an email at simplytax@bkd.com. It would also be great to connect with you on social media. You can find me out on Twitter, where I tweet about tax at Damien Martin CPA. On Instagram, where I post about my life at the intersection of tax and being a dad at TaxDad. On YouTube, by subscribing to our Simply Tax YouTube channel, and out on LinkedIn. I'm Damien Martin. Stay safe and sanitized, and thank you for listening.
The information contained in this episode of Simply Tax is based on data available as of the date of its release. BKD is under no obligation to update this information if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances. Any information provided is not to be considered as tax, legal, or financial advice. Please consult your tax advisor before acting on any matters covered.